Governor of the Central Bank of Nigeria, Dr. Olayemi Kadeso, is set to present economic roadmap and monetary policy direction for the country in the coming year and beyond during the 58th CIBN Annual Bankers Dinner holding this evening, 24th November, at Eko Hotel and Suites, Lagos. Christened the Governor's Day in honor of Dr. Kadeso, this year's event provides the opportunity for the CBN Governor to address stakeholders on financial and economic developments in the outgoing year, as well as the outlook for next year. We promise to bring you details of the economic roadmap in subsequent episodes of the program. Today, we have a presentation on regulation and standardization in Nigeria's technology and payment space from the 2023 Zenith Bank Tech Fair, plus flashback to a business session on monetary policy and financial inclusion during the 16th CIBN Annual Banking and Finance Conference in September, all after this message from the Apex Bank. Stay tuned. According to Financial Times, 6 technology companies ranked among the 10 most capitalized companies in the world this year, an indication of how technology has become increasingly important in this present age. Technology has disrupted old ways of doing things and has brought innovations into our lives. The financial landscape has been permanently changed due to technological advancements. Regulators are required to be attuned to these changes to ensure standardization and provide checks and balances. Director, CBN Risk Management Department, Dr. Blaise Ijebo, at the Zenith Bank Tech Fair in Lagos earlier this week, spoke on regulation and standardization in Nigeria's tech and payment space. Here's his presentation.
They've introduced me as the Director of Risk of the Central Bank of Nigeria. Let me make a caveat here, and this is very important. All right? I am not permitted to make policy statements on behalf of the Central Bank of Nigeria. And because I like my job, I will not be making any policy statement today. So whatever I say is just my opinion. I'm not going to change any of CBN policy. Now, the tech space in Nigeria is very exciting. Very exciting because we have such a huge population of young people, huge population of educated people, and then we have mobile phone density of about 80%. All right? So there is a huge market for technology companies to operate. Secondly, a lot of our industries are just coming out of the initial phase of industrialization, and we are ripe for disruption. Now, I'll be talking a bit more about disruption as we go on. So the opportunities have driven this flight in technology, the flight in our tech space. COVID was also a master catalyst. All right? During COVID, a lot of us couldn't go out, so all we could do was rely on technology for us to get to do things. And that helped push technological adoption. In the payment space, that has been very impactful. We have seen so much digital payment opportunities that have sprung up in the last few years, and many more are coming. But you see, and I missed a couple of slides here, the problem with eruptions is that every eruption comes with risks. And some of the key risks we've been seeing in recent times, fraud, cyber fraud has been growing rapidly, and that's a challenge. All right? We've seen also issues with, and somebody spoke about it earlier, the challenges that are coming with the fact that now we have networked organization. So you are providing service not just by yourself, but by a group of companies or a group of platforms that work together. And any one of them that fails creates a failure for that whole network. And for us as regulator, that is worrisome. Why? Because we have to protect the whole system. Let me pause at that point and make a distinction between what we call standardization and regulation. Standardization is setting the baseline, and usually is voluntary. All right? That allows everybody to operate in that ecosystem so that they can work together. Regulation is saying what you must do, that is codified in law. All right? And a standard can become a regulation when the regulator adopts that standard. All right? But what's the point of regulation? Because a lot of you are worried, and rightly so, that you disruptors are likely to become disrupted by us old regulators. Isn't it true? That we are going to overwhelm you with regulations that is of no good to you, that will stifle technology, that will stifle innovation. But the truth is far from that. And I like this quote by this man called Alfred Kahn. He says, regulation is a great device for protecting the consumer against the market, the worker against the employer, the small business against the big business, and the environment against the polluter. But regulation is also, and I think this is the one you must note, it's also a great device for protecting the regulated, that is you, against us, the regulators. The interesting thing is that technology and innovation is going very rapidly, and us as regulators need to keep up with those innovations. We need to keep up with technology. And the only way you can regulate something is if you understand it. If you try to regulate something you don't understand, you are very likely to destroy it. So what we have done is something we call a regulatory soundbox. And all of you who are here who are interested, please reach out to our website. You will see more information on this. But the regulatory sandbox is a device that helps us bring you into the ecosystem to say, come, set up your platform here, deliver your product within this safe environment, and we'll watch you for 3 months, 2 months, 6 months, whatever it takes for us to understand the product you are putting on in the market, and for us to decide what type of risk and what type of regulation is appropriate for that technology. So that sandbox is a great environment for us to learn what you are doing, what you intend to put out in the market, and for you to also learn and get clarity about what the regulations that are applied to you. With regards to the Central Bank of Nigeria, we focus on payments, we focus on banking, and therefore a lot of you who are in fintech come under our purview. All right? And we make quite a number of regulations. In recent times, we've made regulations around the framework, the sandbox that I just talked about, guidelines for licensing and regulation of payment service banks, regulatory guidelines on e-Naira, Payment Systems Vision 2025, regulatory framework for open banking. That's been generating a lot of interest. And the other one was the one on contactless payment, generating a lot of interest. Guidelines for shared services and regulatory framework for mobile money services in Nigeria. So we've done a lot in this area, and there are other regulators that do things in that area. So what are the challenges with regulation? I think I've mentioned a couple of them already. The big one is cyber threats. Cyber threats and cyber threats. Because a lot of what you are doing it, they're internet enabled. Just as quickly as you learn how to put this product out in the market, people are learning how to defraud you and defraud the system. All right? So that's a big challenge. And these people are not just men, boys anymore in their mom's bedroom or whatever. They are even nation states, big corporates, criminal organizations that are looking to get money anywhere they can find it. So cyber threat is a big issue. Interoperability is another big issue. How do we make sure that every technology that is coming into the ecosystem can talk to each other? Because if they don't, you're going to create problems that we can't solve. Because you're going to create silos in the financial system that struggle to work with each other. And as regulator, we really don't want that. We want a system that can work together and earn value together and deliver value together. The development of clear standards for emerging technologies. How do we regulate emerging technologies? Ability of regulators to adapt quickly to new development. So these are some of the challenges. Out of that, there are some opportunities. All right? Some great opportunities. One of them is the promotion of trust and confidence in the digital payment system. Somebody said, we are not a technology company, or we are not in a technology business, we are in the trust business. And I like to always tell this story. I have a professor friend who never uses his ATM card. Why? Because when ATMs first came out, he used it and he got wiped out. So you can't convince him to ever touch his card anymore. All right? So technology is about trust, and regulators will help you if we work together to build and establish that trust. The other thing is attract investment. I mentioned in the past in the beginning, look, the investors who are coming to invest in technology startups today are going to be happy to continue to do that, and the more mature funds that are going to come in to take over from them will only come in if they believe that there is a safe regulatory environment for them to make money. So it's so important that we as regulators working with you, and I'll talk about that in a minute, create that environment so that we continue to attract investments. The next thing is foster the growth of innovative solutions. We talked about that. We don't want to stifle it because it's creating jobs for our people, and we are so excited that it's also creating young, well-to-do people who will also create jobs in the future. Create a level playing field for all participants. Finally, what I would say are suggestions for next steps. Collaboration and coordination. We all need to work together. Regulators, regulated, we need to work together because the benefit of a good regulatory and standards landscape is not only for us, it's for you, and most importantly, it's for the good of our country.
Oh, I see. Just hold on. In that case, let me call out my PIN. It is 41.
Uncle, please stop.
Stop what?
You're giving someone else your personal identification number PIN?
Not someone else. It's from my bank.
Please hang up, Uncle. That's a fraudster.
That's not true. But they call out my full name. I am sure this is from my bank.
Uncle, no bank is ever going to call you to ask for your personal identification number PIN, your mobile banking password, or your card verification code, CVC.
But it sounded so genuine.
Yes, hackers and fraudsters always sound genuine. But please, Uncle, don't fall for their bait. Don't respond to any phony emails, text message, SMS, and don't click on any link you're not sure of. Even if they call your date of birth or your BVN, don't give them your security details. If you suspect any issue with your account, please go to your bank.
Oh, I see.
This message is from the Central Bank of Nigeria.
Welcome back. You're still watching from the CBN. Panelists at the 16th CIBN Banking and Finance Conference in September interrogated what needs to change in monetary policy, as well as actions so far taken to deepen financial inclusion in Nigeria and also to expand the scope of economic activities at the bottom of the pyramid.
Right now, let's go to the virtual platform. Can we take you first? Professor Olayinka David West. Okay. We'll come back to Professor Ike Aminfe.
All right. Thank you very much, and good afternoon, Chair and delegates. We're talking about financial inclusion and why it's important as a macroeconomic tool and as a developmental tool in general. When you go to the EFINA 2020 results and you ask people, why don't you have a bank account? Which is, again, the entry level to financial inclusion. It's important that we take notice of the reasons. The top 3 reasons are attitudes and perceptions around preference for cash, for example. Trust is another one. The second reason is distance, and that's the problem Sanef and Ronke and her team are trying to solve. How do we bring financial access closer to the edge of the market and at the bottom of the pyramid? And then the third is this issue around livelihoods. There is no economic inclusion. They don't have jobs. Neither do they have any form of stable income. So the bottom line is that I don't need a bank account if I don't have money. And those are the things we need to address as we think about financial inclusion. Because while the central bank and the bankers have taken it on as their initiative and driving it, it's actually a social development tool that needs the attention of every single sector of the economy. So how do we think around it? For example, social development, we look at women's financial inclusion. In Africa, Nigeria has the highest gender gap, which is 8%. But then again, so women have less access to financial services than men. How do we close those gaps? How do we ensure that we can build in women's economic empowerment systems to aid them to drive their economic activity that helps them need a bank account and then formalize the way they think about doing business, etc. So I think in Nigeria, we've done quite well, but what we still need to do is solidify the foundation so we can drive scale. And scale is what we need, because having 106 million plus Nigerians in the financial system, but yet only half have access to formal financial services really serves the mantra and the mandate that it's more expensive to be poor. So collectively, public, private, 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 public, public, we all need to come together to say, you know what, how do we change the narrative around financial inclusion, around access in a manner that drives impact and drives social change? Thank you very much.
Thank you so very much, Professor David West. So let me come back to the hall here and then invite Mrs. Akimami to also make her own contribution.
Yes, so I'm going to look at it more from a macroeconomic point of view. I'm an economist by profession. And one of the questions that our speaker raised, Reza Khan, she asked, is inclusion possible in a tighter policy environment, considering the fact that the CBN's primary objective is price stability? And we know that what is driving this increase in interest rates is basically to rein in inflationary pressures. And that addresses some of the issues we are facing with respect to financial inclusion in Nigeria. So when you're talking about access to credit, affordability, low income, and what have you, because the higher inflation rises, your assets, the value of your assets reduces. So basically purchasing power is eroded, asset portfolios are eroded. So what can you do in a situation like this? So basically it's just looking for more cost-efficient measures, more cost-efficient financial services, basically. Because the people that we're trying to bring into this financial fold, if they don't have the income, they're not going to open bank accounts. You can only do that based on what you have. So, and one of the major issues also is the high cost of financial services. So we need to find a way to make sure that these financial products are affordable. So come up with innovative ways, because I mean, you also have your profit margins to think about. So I mean, that talks also about collaboration with all stakeholders. So the CBN, the banks, the fintechs, it's not competition. It has to be that collaborative effort with all stakeholders present. We've talked about investing in digital infrastructure and what have you. I'm also going to talk about the importance of investment. There's this national income identity equation that we economists like to talk about, wherein aggregate output is a function of consumer spending, government expenditure, investment, and then your external sector. Out of all these indicators, it's only investment that has a multiplier impact. So that just shows the importance of investment. You cannot underestimate it. So whatever we need to do as policy authorities, as industry stakeholders, as the government, as the private sector, we need to ensure that we attract investment by creating that enabling environment, by ensuring that there's policy, clarity, and certainty, by boosting investor sentiment to attract investment flows. Because without investment, I mean, there's so far we can go and achieve. So I just want to close with that investment is very, very important for us to achieve the goals of financial inclusion and even all the other goals that we have to achieve economic growth and transformation, which is the theme of this particular year's CIBN conference. Thank you.
Thank you so very much. That was very pointed. So we now go back to the virtual platform and take the comments from Professor Kenneth Ife.
Thank you very much for having me. And I begin by putting my take. My take is this, which you could call the hypothesis, is that as long as we have import-dependent economy, which places our economy on the transmission belt of global economic shocks and headwinds, and as long as we continue to experience high levels of financial exclusion, then monetary policies, parameters, and macroeconomic indices will continue to struggle. They will continue to struggle. Now, if you look at the central bank, which has the core mandate in the area we are discussing, it has mandate on price stability and financial system stability, but also has a secondary mandate to promote sustainable economic development and inclusive economic growth. Right. I know many people are not happy about the extent to which they have intervened, but the intervention is necessary if we can have some understanding on how far it can go. First, look at the key challenges. First, the high level of unbanked, which we know varies from what we are, is at variance with what NBS says and what World Bank says. World Bank has a higher view. Then you have the lack of financial literacy, the reasons, a part of the reasons, lack of financial literacy, education and awareness need to be, high cost of opening bank accounts, and then the large informal economy and also consumer credit that is low. All of them come together to tell you what the bounding constraints could be. Then we also have the non-inclusion that can affect savings and liquidity of banks. If we want the banks to give out more money, then bring in the deposits. And then also, the constraints that they're facing with some of the CRR and the liquidity ratios and all of that constrain the amount that the banks also can lend. So we're aware of all of that. But the fact of the matter is that when you don't have enough inclusion, it also affects the transmissibility of monetary policy. So when the bank comes to open market operation, who is it targeting? It's targeting the banks. The banks have very little money at their disposal, and all of these issues will begin to crystallize. But the CBN's financial inclusion strategy was actually set out clearly to significantly increase access and then also find a way of working around the high cost of financial services. So we have to compare like to like. CBN has invested in digital payment infrastructure. We know that, including, of course, the USSD. It has also licensed a lot of giving impetus to fintech engagement in agency banking, giving licensed telcos to help out, and even the FIRS is finding them useful in helping them collect their taxes. So e-Naira is a solution, but it has its potential to be realized. But the fact is that they have invested. It is the investment in payment infrastructure and the systems that is helping drive this. So you can't exclude the central bank's intervention. They are helping to create a level playing field and invest in the national infrastructure. They will enable the players to play.
That's the package from the CBN this week. Be careful not to fall for any fraudulent recruitment portal or loan scheme advertisements purportedly from the Central Bank of Nigeria. Get your information from trusted sources always. Report unresolved banking issues to the CBN Consumer Protection Department using the email cpd@cbn.gov.ng. Attach relevant documents. Call the CBN Contact Center on the phone line +234 700 2255 226. Local call rates may apply. Write to us through the email address fromthecbn@gmail.com. Follow us on Facebook, YouTube, Instagram, and Twitter for updates and to watch uploaded episodes of the program. We invite you to join us again next time. I'm Uliye Misi Dada. Stay safe and bye for now.